Ladies and gentlemen, good day and welcome to Spandana Sphoorty Financial Limited Q3 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Venkatesh Krishnan, MD and CEO, Spandana Sphoorty Financial Limited, for his opening remarks. Thank you, and over to you, sir.
Good evening, all. Thank you for taking time out to attend this call. This is my first earnings call at Spandana, so we'll take just a couple of minutes to introduce myself. My name is Venkatesh. People call me Venki. Been working for about 35 years. 31 out of those 35 years have been in the financial services across banks, both foreign as well as Indian bank, NBFC, insurance, stockbroking, and now, of course, NBFC MFI. I joined the company exactly 2 months ago, 27th of November, from HDFC Bank, where I spent about close to 7.5 years handling both microfinance at the retail as well as the wholesale piece. So back to the earnings call. So thanks once again for joining this call. The winds of change are quite visible both within the industry as well as at Spandana. So we've been having a struggle for the last couple of quarters, which initially people thought it's for a quarter or two, but then got extended for a variety of reasons, and now things are looking reasonably settled, or at least improving. What we have realized at Spandana is the new book, which is sourcing starting 1st of April 2025, after the introduction of the guardrails by the SRO. That book constitutes about 58% of the overall book, which we expect it to be about 90% by end of this financial year. This book has a collection efficiency of 99.8% as of December. We also have a separate team looking after the 90-plus collections, since that's a little larger pool. There, the performance in the Q3 was much better than Q2. We did about 65 crores of collection in the 90-plus bucket. That team comprises of about 800-odd exclusive people, which we wish to take it up to about 1,500 and retain it at that level for the next couple of quarters, and then decide how are things moving before we maybe wind up that sort of a segment. The other good thing that happened during the quarter was lenders reposing faith in us, and we managed to raise close to about 1,700 crores in Q3. Bulk of the money came in actually December. We also have a new Chief Transformation Officer joining us with nearly 30 years of experience, and he joins us from Chaitanya, where he spent close to 10 years, both in business as well as audit. And we wish to take a relook at how we have been running this business. There are some minor tweaks to be done, and which is what he's going to do. We also expect the credit guarantee, the much spoken about credit guarantee scheme, to be rolled out in due course of time, whether it comes out in the budget or immediately after the budget. One is waiting and watching, and of course also trying to understand the contours of this guarantee, which I'm told through sources that it might benefit the small and mid-sized MFIs, or it's aimed for this segment of the microfinance companies. So a couple of things that we are working at Spandana now that this quarter, I'm sure my colleague will take you through the numbers. We've been people positive, first time in about 2-3 quarters that we got into the red. So a couple of changes that we are looking at. One, of course, is we are trying to merge some of the non-productive branches. We have about 1,500 odd branches, trying to bring it down to about 1,250. Not shutting down branches, but trying to merge some of the branches which have run into some sort of an issue or wherein the number of people are less. And this 1,250 branches is the number that we are looking at, which is safe enough to sail us through 12,500 crores over the next couple of years, looking at 10 crores as a sort of a benchmark per branch AUM. We are also delayering, getting into sort of a delayering at the regions. We had a lot of layers, keeping in mind that we wanted to grow to 15 and 20,000 crores. Now that that is some distance away, we are trying to delayer and bring it to the current book size that we have, a little over 4,000 crores or close to 4,000 crores. The other thing that we are proposing to do is merge our subsidiary, which is the Chris Financial, with the parent. Chris has been doing individual loans as also loans against property, which is about a 650 crore book. But considering the fact that now with qualifying asset criteria having come down from 75 to 60%, and even if you take about 10-15% of cash, we have certain room to do any sort of a business other than the qualifying asset within Spandana itself. So rather than having a separate management with separate legalities and challenges and costs, we are trying to merge it, which might take about 6 to 9 months, but hopefully that should get completed within the financial year. Considering that coming financial year, considering that it's a 100% subsidiary of the parent Spandana. The other important thing which thought of sharing with all of you is we are also planning to move to a new LOS platform. We have the current JAM solutions, and we are planning to move to a platform which is being developed by Perfios. It's a known name in the financial services industry. Their LOS is running in a couple of PSU banks across maybe hundreds of journeys. So we are going to be the first MFI using the platform of Perfios. We are seeing a lot of technological advancements that we've been talking to Perfios, and in this segment, when we are dealing with customers who are largely illiterate, bottom of the pyramid, they keep changing their mobile numbers at frequent intervals. They may be moving away from one place to the other. There are certain technological advancements we see in Perfios which will help us be in touch with those customers at regular intervals, speak to them, reach out to them as and when it is required. We are also thinking of launching an individual loan product. We are not too sure whether this is the right time or not, but yes, we have drawn the contours of the individual loan offering. And once we have the Perfios platform in place, which, as I said, could be anywhere between 5 to 6 months, and if all goes well with the loan against product, we may launch the individual loan as a pilot in maybe 1 or 2 clusters of branches to see how is it working. Because on any given day, that is also going to be unsecured, but there will be underwriting and there will be more checks and balances as compared to a JLG offering, which is a vanilla product, wherein you just meet a handful of women in a group and you lend to them after doing the bureau check, and there is no further credit as appraisal as such being done. So on that note, I will hand over the mic to my colleague Ashish Damani, the CFO, who's been in the company for the last 4 years, and I'm sure he will take you through the numbers, post which, of course, we will answer your queries. Thanks once again for joining us on this call, and wish all of you a very happy new year, though there are about 27 days have passed by, but it's still a new year. So wish all of you and your near and dear ones a wonderful year ahead. Thank you.
Thank you, Venki. Good evening, everyone. Yes, I'll cover some of the numbers in details, business drivers and financials before we open the floor for question and answers. Let me start with giving you the important aspects that we've been observing on collection efficiencies. All the new book that we have sourced during the financial year has been trending very strong at 99.8% collection efficiency. This has definitely given us confidence to ramp up the disbursements during the quarter. So if you see, the disbursements have jumped by 27% compared to the previous quarter at 1,188 crores. This also actually on a gross basis has given us a 1.8% on a company level AUM increase before write-off, and also 2.5% when we look at microfinance book. However, post write-off, the AUM stood at 3,948 crores for 31st of December. Our portfolio quality in the X bucket is something that we've been carefully monitoring. Across the states, we have seen improving trend. We have detailed it out in our deck for the key states or monitorable states as well. But when we look at the Pan India, we have moved to 99.3% for the December quarter compared to 98.7% when we looked at September quarter. So there has been a good improvement. We hope that as our book, the new book or the book which is originated in the current BRE or the new BRE continues to increase to 90%, like Venki explained. This number will be sustained over 99.5% across the set of loans. Flow forwards in the 1 to 90 book have seen some marginal improvements. About 2.5% of the AUM was between 1 to 90 DPD at the end of December, compared to 5.5% which we have seen in September quarter. The consolidated GNPA is now down to 2.6%. This was at 4.2% the last quarter. Likewise, the consolidated NNPA is at 0.97%, while the standalone NNPA is now down to 0.5%. We continue to maintain our provisioning at 80% on an overall balance sheet basis. We have 5.4% that we carry as a provisioning across the buckets. Borrowings and liquidity, I'd like to cover a little bit more detail. We have been maintaining sufficient liquidity on the balance sheet just to ensure all the external headwinds are addressed. 1684 is what we have raised during the quarter compared to 160 crores in the previous quarter. We are ensuring that the borrowings are in line with the business momentum, and we continue to keep improving on the disbursement trend or maintain the disbursement trend. At the end of December, we had 1626 crores of cash and bank balance, which is very healthy. On the financial performance, portfolio originated, I have already explained, that is at 58% of the AUM and is trending very strong at 99.8% collection efficiency. This is likely to go to 90%, as Venki alluded to earlier. Portfolio quality is primarily also driven by this mix and has helping the yield as well. The yield, reported yield for the quarter is 22.4%, up from 19.6% in the previous quarter. We believe that this will continue to help us in the coming quarters, and the yield should improve a little more from here on. Despite having an increase in cost of borrowings by 40 basis points, the NIM has expanded to 11.1% in comparison to 8.4% in the previous quarter. We expect all these improvements in yield and NIM to continue, like I said, as the stronger or the newer book replaces the older book in the coming quarters. Happy to explain the PPOP of 8 crores during the quarter compared to the loss of 40 crores reported in the previous quarter. This includes the recoveries that we have done during the quarter and excludes the one-off impact of the new labor code cost that we have seen for the quarter, which is about roughly about 8.4 crores for the on a console basis and 7.6 crores for standalone basis. So overall, we have reported about a 95 crore loss for the quarter, largely stemming from the write-offs or the slippages that we have seen, largely from the old book, and that one-off impact of the new labor code that was implemented. So we will now like to open the floor for the questions. Just would like to highlight one aspect, that we would continue with the pace of disbursement and continue to monitor the strong portfolio quality that is developing in the new book. Thank you very much, and operator, if you can open the floor for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star then one. Our first question comes from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Yeah, hi, good evening. Congrats on much improved performance and congratulations to you, sir, on becoming the MD and CEO of Spandana. So I've got, two, three questions. First, in January, how are you seeing the X bucket collection efficiency trending, as well as how the disbursements are also playing out in January? And in December collection efficiency of Andhra Pradesh, we saw a little bit of dip. So has that kind of normalized and come back in January?
So as your first question, January thus far on disbursement and collection efficiency looks better than December. And as far as Andhra Pradesh is concerned, if you look at the numbers, October was something like 90, a little over 97%, which went up to 99 in November, came down to about 98.9 in December. More or less, it's going to be a little around the 98.9 or 99% collection efficiency. So things are improving and should improve in the months to come.
And sir, how do you look at your disbursements, scaling up? Because see, there are two comments that you made. One is that the new book will become 90% of AUM by March. And then there is a statement in the PPT saying that your loan officer productivity will improve to about 250 customers per loan officer by March. This implies a significant scale up in disbursements in Q4. Maybe the number could be between 1,600-1,700 crore, kind of a disbursement in Q4. Would that be correct?
So we are looking at 1,500 crores to begin with. It's more important to do a sort of a sustainable business. And we want to stabilize at about 500 crores a month and then take it to about 550-600 crores as the months pass by.
And just one last thing on, funding the growth. What has been the traction in mobilization of, bank loans since you have come in December and January? And at what rates are the new bank loan coming? And whether the kind of growth that we are wanting to achieve, say 500 crores or 550 crores per month, would it get fully funded, largely funded by bank loans coming at a more, reasonable rate?
The bank loans currently contribute about 42% of our overall borrowings and should go up as the quarters pass by and the results keep improving, especially considering that the PSU banks are still out of the fray currently. We've been funded by private banks and foreign banks, but should see again, especially after the credit guarantee scheme is out, we need to see what are those contours. But hope that the PSU banks come into the fray. Once that happens, our share of bank funding, I think, should go up from the current 42% to about 60%.
Got it. Thank you. I'll have more questions, but I'll come back. Thanks.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then one to ask a question. Our next question comes from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir. Sir, two questions. So first of all, on you not take CGFMU, so what's the sort of plan there? Are you planning to take it, or if you can throw some more light on that?
So CGFMU, the way the scheme is that in a normal environment, in a business as usual environment, if when your credit costs are going to be, say, sub 3%, it doesn't make sense because of where it is in this plan. And unfortunately, since we went through the rough, there is no point in taking it now. But we are definitely trying to see if it could be studied well and try and take it in the new financial year.
Okay.
And especially we also want to see the credit guarantee scheme and then take a call vis-a-vis what are the kind of costs involved and what are the kind of benefits we anticipate.
Okay. And secondly, if I look at your NPA numbers, in the subsidiary, it looks like you have hit 10% gross NPA. So if you can throw some light on what is the kind of, assets over there, And what is the stress and how do you see it resolving in the coming quarters?
So that book, CFL, which is a Chris Financial, has two lines. One is the individual loans, which is about roughly 300 crores, and another 350 crores is the individual loans, and about 300 crores is the loans against property. There are two things which is causing this so-called the losses that you spoke of. In loans against property, we need to really bring down our cost and improve our productivity. To a great extent, the cost will be taken care of when we do the merger. And in the case of individual loans, the impairment has been relatively high, which again we are trying to now put a special team and try and ensure that a couple of months the focus intensifies so that we can improve the collection efficiency and then look at increasing the disbursal. But hopefully in the coming months we should address both issues around LAP as also the individual loans.
Okay. And in your net worth, what part is DTA and what are the timelines to consume that DTA?
So total, hi, this is Ashish Sarvesh. So total D8 is roughly about 700 crores. The timeline, the tax authorities allow you to consume that in 8 years. We see that, we'll sufficiently cover that. And that's how it has been recognized.
Okay. And this quarter we have seen a good TWO recovery of 65 odd crores. So what's the pool right now that we have from which we can recover, and what is the expectation for fourth quarter and let's say next year? How much are we expecting to get out of this?
The overall NPA pool is upwards of 2,500 crores. It's about 2,700 crores. And we have kept 3 quarters for us between this quarter and another 3 quarters to collect as much as possible. So we are aiming for anywhere between 20 to 25 crores a month.
Okay. Okay, sir. Okay, that's all. Thank you.
Thank you. Your next question comes from the line of Rajakumar Vaidyanathan from RK Invest. Please go ahead.
Yeah, good evening. Can you hear me?
Yeah.
Hello?
Very much. Carry on.
Yeah, thanks for the opportunity. Sir, just 2-3 questions. The first question is, what is the medium-term outlook you have for the next 2 to 3 years? Where do you want to take the AUM, and what are the ROA levels that we are looking at?
As far as the business is concerned, in recent times, I'm sure you've been hearing the regulators saying they are not very enthused with institutions in this segment showing upwards of 25-30% growth. So whilst owing to the low base, I may end up growing at about 40%, but I'm also keeping my eyes and ears closer to what the regulator is guiding us. So I could see about 25 to 30% growth is there for sure. Anything more than that, we need to wait and watch.
Okay. And the second question is, in the recent credit rating report, the agency has highlighted the frequent changes in the management as an kind of hurdle for normalization of operations. So would you like to comment on that?
I just missed you. If you could just repeat, please.
No, the recent credit rating given by CARE for Spandana, they have highlighted that there have been significant changes in the senior and medium, mid-level management, as well as significant attrition at the ground level. And they are saying that will come in the way of normalization of operations.
As far as the ground level is concerned, yes, there have been attrition, and attrition has been relatively high. But given the fact that things are improving, as I said, both at Spandana as well as in the industry, I'm sure people spending time on recoveries will come down. They will be able to do more business, and it will be more positive. So that should also bring down the attrition. So I foresee the attrition coming down in the months to come. As far as the senior level is concerned, not too sure which are the many attritions you're talking of. There could be some attritions here and there, but otherwise, by and large, the team is intact.
Okay. And the last question is to the CFO. This is on the DTA number of 700 crores that you just mentioned. So that means you are having a loss of almost 2,600 crores on which you have set up the DTA. So that loss is almost 1.5 times the market cap of Spandana. And also, if you see last 15 years, you have not made cumulatively that kind of profit. So looks like you guys are kind of bit aggressive in in booking the DTA. I think you may have to probably relook at that number when you do the March numbers.
Yeah, so amount, the gross profitability required to cover this will be roughly about 1,800 crores and not 2,000 odd crores. Yeah, we will keep evaluating. As I explained, that we have 8 years to cover this DTA amounts, and given the current projections, whatever we have lined up and reviewed, we see that we will absorb all of this DTA. So yeah, but yeah, this is something that we are monitoring very closely, and we'll take call as and when required.
Okay, thank you.
Thank you. Participants, if you wish to register for a question, please press star and then 1. Our next question comes from the line of Vatsal Paraksha from Knightstone Capital Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just one question. Can you just quantify the slippages for this quarter?
Slippage for
This quarter.
this quarter. Total slippage for the quarter was about 152 crores during the quarter, I mean. However, the credit cost that we have taken is about 58 crores, which is after recoveries and whatever the proceeds we have received from the ERC transaction.
Got it. Okay, thank you.
Thank you. Our next question comes from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, good evening, sir. Thank you for taking my question. So just trying to understand one thing. I mean, a lot of MFIs that we speak to, right, often tell us that if one were to adhere to the MFIN guardrails, the rejection rates are actually very high. And so today when we look at disbursements, right, there are two things which are kind of plaguing the MFI industry. One is obviously availability of capital, I mean borrowings, your liabilities. And the second thing is, I mean, the rejection rates are supposedly very, very high. So what are our rejection rates like? And when we say that we are looking at a 25 to 30% growth and possibly even higher this year, given our small base, how are we looking to address it? What part of the growth can actually come from your existing customers, right? Basically, giving them more loans, and what portion of that growth can actually come from newer customers? That is something I wanted to understand.
The rejections currently hover at around 60%. It is indeed high, and it may remain so for the next couple of months because of the impact of all that has happened over the last 6, 9 months or 12 months. That said, the ratio of new to credit plus new to Spandana on one side and existing customers is about 40-60. And as we go along, there are still, when I travel, I keep meeting various money lenders, and they're all thriving. So we have not reached a saturation point to say that there are new customers in the marketplace, but you've got to find them. So there are enough and more customers which are there, at least for the next couple of years, and you've got to get them into the mainstream. So effort is required, but a 40-60 or a 50-50 share of existing customers versus new customers, whether to credit or to Spandana, is definitely possible.
Got it, sir. And then, sir, one last question that I had was around the industry dynamics. Obviously, the fourth quarter comes across as a seasonally strong quarter. We see very sharp momentum in disbursements in the fourth quarter across a lot of MFIs. Earlier during your opening remarks, I think you made one comment wherein you said that this quarter we will look at a monthly run rate of about 500 crores and then maybe take it up from there to 550, 600 crores. Basically, rather than showing a sharp spike, right, we want to gradually build up the business momentum. So to that end, I'm just trying to understand, when you look at the industry, do you see everyone, and on a no-names basis, everyone remaining compliant, right, to guardrails, and there is no flow of money again to basically MFI borrowers? Or do you think the excesses in the industry have now started, and maybe in the next maybe 3-6 months we'll again see everyone starting to disburse just like we did in the past?
So the last episode that happened, of course, all the incidents that have engulfed the microfinance industry all are man-made. Even COVID was man-made. So people have realized that the flow of funds into the industry is going to be difficult if you are not maintaining a proper books of accounts. So I don't foresee people randomly giving money to customers in spite of if there is a breach of guardrails. Secondly, the SRO has become far more active today. They are doing third-party evaluations through consultants like Deloitte and others, CRISIL, to name a few, and they are throwing report at the respective institutions in case they find a breach. They are even writing to the board if they find continued breach and are reporting to the regulator. So if someone is trying to breach the guardrails, they are doing at their own risk, and life is going to be short-lived.
Got it. So this is useful. Thank you so much for patiently answering all my questions, and I wish you and your team the very best.
Thank you.
Thank you. Your next question comes from the line of Chintan Shah from ICICI Securities. Please go ahead.
Thank you for the opportunity, and so congratulations on the improvement in the business momentum. So, sir, on the credit cost, firstly, so I think this quarter we have seen a steep decline, almost 80% sequential. But now going ahead, given that we are already we have a provision of almost 80% on stage 3 and 45% odd on stage 2, and incrementally in the book being of a much better quality with higher collections, how should we look at the credit cost for FY27? So that's the first question. Yeah.
So we expect about 220 odd crores of these are all numbers, 227 crores or 225 crores of gross slippages and net of about 50 odd crores in FY27.
So 225 crores gross slippage and 50 crores net slippages, FY27, right?
That's right, yeah.
So, okay, understood. And so what has been what is the write-off policy, and what was the write-off number for the current quarter, if you could share, current quarter and for 9 months?
See, you have detailed this on slide number 214 for the quarter. So for the quarter, we have written off 214 crores. The approach has been similar to what we have followed earlier, which is 180 days plus. And although this is not the policy stands at 455 days. However, we've been trying to look at how the engagement has been with the borrowers, and accordingly we have taken these measures. Probably this will be the last quarter in which we take this approach. So yeah, 180 days plus and engagement during the quarter is what we have looked at.
Okay. So going ahead, probably that you will again be writing it off at 450. So we won't be seeing much elevated write-offs going ahead. Is that a fair assumption? Yeah.
That's a fair assessment. Yes.
Understood. Yes, sir. And on margins front, actually, margins have seen a sharp uptick. I think this largely the yield rise is largely on account of lower interest reversal. So if you could also quantify the interest reversal number for Q2 and Q3, that would be helpful.
So for the current quarter, Q3, it is 14 crores. For the last quarter, it was 33.
Okay.
For Q1, it was 50. Yeah.
Q3 it was? Sorry?
14.
14 versus 33 crores QOQ. Yeah. So, and I think you mentioned margins will see further uptick. So now going ahead, this will be largely driven by decline in the borrowing cost, right? So borrowing cost looks relatively higher compared to our peers. So pros the credit guarantee scheme how much are we seeing some reduction in the borrowing cost? Any ballpark number, or next year where should it settle around?
No, so the reason why I said there will be expansion in the NIM further is largely because the top line has been muted. If you look at our lending rates, we are a blended lending rate on a new book is about 25.3%. However, the yield is stacking up at 22.4 right now. So there is a gap which will be built over a period of time with the new book, or the stronger performing book becomes a larger percentage of the balance sheet. So your yield will move from 22.4 to very likely closer to 25 over time, and accordingly what we believe is will help us have a better NIM going forward. The cost of borrowings is at 12.6. In fact, there has been an increase of 40 basis points. We see that it will hover between 12.5 to 13% in terms of cost of borrowing. So we don't see much immediate improvement there because our reliance has been on both capital markets as well as bank funding, which is more or less 50-50, like Venki was explaining earlier.
Sure. And this gross slippage which you mentioned for FY27, that would be on the console book, as we might be also looking for a merger only before the end of the year. So that will be on the console basis, right?
Yeah, that's right.
That's right.
That's it from myself. I'll come back in the queue. Thank you.
Thank you. The next question comes from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, just on previous participant question on this technical write-off of 214 crore in this quarter, how much we expect this number to continue going forward, or is it like most of it is already done?
So yeah, most of it looks like is done. We have to now look at the business from a more BAU standpoint. Like Venki was explaining, we are likely to have a 2.5 to 3% kind of a credit cost is what we are assuming in future.
2.5 to 3% next year is what our estimate is.
Yes.
But you also said that there is 20-25 crore per month which we expect to come back. So this is including that, or that is excluding that will come back?
That is recoveries. I'm saying on a business as usual basis. If one has to look at what kind of credit costs we have built into the pricing and what do we expect, then it's 2.5-3%.
But given we have such a large pool, next year credit cost could be quite lower than this business as usual number.
So on a net basis, I think we also give the number. It should be 50 crores or around a number like that.
So only 50 crore of net slippage we expect in the next year.
Yeah.
Got it, sir. And sir, in terms of book reduction, as in from peak, our AUM has reduced to like 1/3 from 12,000 crore at the time of peak to now around 4,000 crore. So how soon we expect things to, as in business, to improve, grow fast?
So as I said, we have to be watchful in how we grow. We want to grow sustainably. So whilst we grow, I need to ensure that my cost and my collection efficiency remains steadfast. So if you ask for a ballpark figure, we are expecting roughly about somewhere close to between 9,000 to 10,000 crores of AUM by FY28.
And any ground level changes
Sorry to interrupt, Ankur sir. May we request to return to the queue for follow-up questions?
Sure,
thank you. Our next question comes from the line of Sagar Shah from Spark PWM. Please go ahead.
Yeah, thank you so much for the opportunity. For congratulations, sir, for showing good set of results. My first question was the figure that you told about the disbursements of 1,500 crores by Q4 FY26. So I wanted to understand, are we eyeing weekly or monthly payment model in that disbursement model? And secondly, in state or which are the states actually are we eyeing for a growth of almost 30% quarter on quarter in disbursements? Which states are we eyeing? That is part of the first question.
So let me take your second question first. Our top 6 states contribute about 60% of our AUM, which is Odisha, Madhya Pradesh, Bihar, Karnataka, West Bengal, and one more state. So we will continue to grow in these states, and there are states like Tamil Nadu wherein our presence is very limited. We are planning to grow there. Kerala, we want to be a little watchful. We are present in Jharkhand and Chhattisgarh. So typically, if you look at the microfinance industry, the top 10 states contribute about 80% of the business. Now, in our case, the top 10 states don't feature in the industry, doesn't feature Jharkhand and Chhattisgarh. So we will also try and grow in those 8 or 9 top states wherein our presence is, there is scope for us to grow, and our presence is also limited to a certain extent. Which was the first?
Okay.
Disbursement presently is roughly 20% in weekly business. I think that is in line with the number of branches we have in the weekly format, and it just continues that way.
So we will neither change the monthly branches to weekly nor the weekly to monthly. So the 80-20 ratio or 85-15 will continue to remain.
Okay, so 80% will be monthly and 20% will be weekly going ahead as well. That we can safely assume. And my next question was on the loan officer count and the employee count. On the loan officer count, we saw almost a reduction of almost 900 officers in this quarter as well. So where do we see this number stabilizing, sir? Because we are eyeing a very aggressive AUM outlook in FY27 and 28, and as well as for exit Q4 FY26. So where do we see this number stabilizing?
So on the loan officer count, we are looking at somewhere between 4,800 to 5,500 as a stable factor. And in the interim, there could be some officers who may move into the so-called 90-plus collections pool. Once that stabilizes, they may come back. So they're all fungible. These are all frontliners who can either do collections or business or both. But 4,800 to 5,500 is a number we are aiming for on a steady-state basis.
And that will be visible in the next quarter, the number that you are just stating?
In the coming 1 or 2 quarters, yes.
Okay, so basically we can expect some healthy productivity from at least from the remainder of the loan officers count. The productivity will almost double as per the metric that you have just stated, if I'm not wrong.
So since we are taking away the 90-plus collections from our regular officers, we expect the business productivity to improve.
Okay, got your point, sir. Thank you so much, and all the best for future quarters.
Thank you. Participants, you may press star and 1 to ask a question. Our next question comes from the line of Shripal Doshi from Equirius. Please go ahead.
Hi, sir. Thank you for giving me the opportunity. I was looking at one of the slides wherein we've highlighted that 86% of our customers had less than 1 lakh of household outstanding. And I mean, apparently we've seen significant rundown in terms of customer base, of course, given the kind of industry stress as well as the write-off that we have seen. But with this number of 86% of the customers below 1 lakh household credit, doesn't it give us an opportunity to sort of scale up our size or our share in their pocket and grow? So is that how we are trying to strategize and give more disbursements to the existing customers than to go and acquire customers from the open market?
So it's a combination of both. As I said a little while ago, these are all customers that you're referring to. The slide is outstanding loan of less than 1 lakh. So definitely, of course, you can give a top-up loan or a higher loan to these women. At the same time, you have to keep identifying new customers because your new customers become your existing customers over time. So it is not either or, it has to be both.
So to take it other way, what is the disbursement ticket size that we have for our, let's say, years and new customers currently?
So the new customers would get about 50,000 rupees, whereas existing customers, depending upon their vintage, can even go up to 1,10,000 if they have been with us for about 5 years plus.
Got it. Got it. And so the second question was pertaining to the pricing. So, I mean, have we taken any price hike in the last 6 months? And if yes, what is the sort of a range that we have taken?
So it currently hovers between 23 and 26%. 26% being in the first cycle, keeps coming down.
Mm-hmm. Okay, so with vintage, it will keep coming down.
Absolutely.
The third question, the last question was on the, so while we are looking at acquiring, rather merging our subsidiary, but what is the kind of mix that we plan to sort of achieve by FY28 in terms of loan book mix? I'm sorry if you've answered this question because I joined the call a little late.
So the qualifying assets has to be always at 60%. And if you believe that
Right.
15-20% will be in cash, so you will have a leeway to the extent of 10-15% being in non-qualifying assets. And as the JLG book grows, your ability to do more of non-qualifying assets also improves.
So are we targeting that sort of a percentage in the loan book mix? Or, I mean, I understand from the opportunity point of view or from the regulation point of view, but are we strategizing our loan book mix to reach that level?
We are looking at, today my loans against property is about 300 crores. Trying to see if I can take it to about 1,000 crores in the next couple of years.
Got it, sir. So that is like 10% by FY28 sort of a number is what we are looking at. Is that fair assumption?
Absolutely.
Got it. Thank you, sir. I'll come in the queue for more questions. Thank you for answering my question and good luck for the next quarter.
Thank you. Participants, if you wish to register for a question, please press star and then 1 now. Our next question comes from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Hey, thank you for allowing me a follow-up. Firstly, sir, I just want to check on a few things. Can our absolute OpEx fall, further for the next few quarters, given the fact that we have kind of calibrated employee count and loan officer count? That's one check. Second is, should we break even or can we break even on a consolidated basis by second quarter of FY27? Is that also a possibility on the table given the way our disbursement and credit costs could play out? And third is, in CRIS, has the credit cost peaked out? Because when I look at the credit cost of CRIS in the last 2 quarters, it's very high on a relatively small book. So are we behind in terms of the peak of the cycle of recognition there, or would more credit costs come from that book?
So to answer your query, we should try and break even next quarter. We are aiming, that's our immediate objective, considering that this quarter or the last quarter was PIPA positive. As far as CRIS Financial is concerned, as I said a little while ago, our focus on individual loans is to focus more on collections over the next 1 or 2 quarters, try to get the book back on track before we start disbursing all over again or going about a little aggressively. The LAP book is behaving very well with a GNP of little over 1%, so no worries on that. We are trying to see how to grow that book more, as I said, from the current 300 crores to about 1,000 crores. I think you had a third question as well.
No, it was on the OpEx. So when you're talking about breaking even, did you mean that you will break even in the current quarter, which is fourth quarter? And would it also imply that the absolute OpEx will fall, given the fact that the adjustments you have done in employee base and loan officer base?
हम मेहनत करेंगे, आप दुआ करो, हो जाएगा. So OpEx has been coming down 884 crores 2 years ago came down to about 790 crores last year to about 720 crores this year. Trying to bring it down further. There is scope. So it's a combination of increasing your revenue and bringing down your cost and your credit cost. That's how you bring in profitability.
Got it, sir. Best of luck and thank you so much.
Thank you.
Thank you. Your next question comes from the line of Chintan Shah from ICICI Securities. Please go ahead.
Thank you for the follow-up. So, sir, just on the AUM growth, so I think this quarter, if we exclude the write-off, then we have seen a sequential uptick in the AUM. So, but now the repayments were relatively elevated in the past, but given now the AUM is 4,000 crores, the repayments also would be less. So going ahead, can we expect a sequential growth in disbursements to continue, a sequential growth in AUM to continue in the coming quarters as well, given that write-offs also would be lower?
Very much, very much. With the kind of disbursements we are expecting, with the kind of write-offs which we are expecting to bring it down, there should be growth.
Okay, and repayments, so what sort of steady state repayments could we assume on the AUM, on the closing opening AUM? Any ballpark number there?
900 crores.
900 crores. Sure. Okay. Thank you, sir. Thank you. Yeah. Okay.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
Thanks a lot all for participating and asking those relevant questions. We at Spandana stand committed to delivering the results. Yes, there have been a couple of quarters which did not go our way, but NFM more focus is on to get back on track, as I said, both on the revenue as well as on the cost as well as on the credit cost front. So with that, I want to thank all of you once again from all of us out here at Spandana, and see you in 3 months from now. Thank you.
Thank you. On behalf of Spandana Sphoorty Financial Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.